Chapter 8, Current Liabilities. In this learning objective, we'll account for employee and employer payroll liabilities. This is probably my favorite part of this chapter, as it discusses employee-employer payroll liabilities, something that we will all incur at some point in our lives. It's important that everybody understands how paychecks are calculated and how the amounts that are withheld from your paychecks are figured. And this part of the chapter goes over that. So, payroll costs for employees and employers. We're breaking it down by employee costs and employer costs. Employee costs. These are the amounts that are withheld from your check. If you think about it, when you work, you earn what's called a gross check. Your gross check is the amount you earn. Say you work a 40-hour week and you earn $8 a week. So 8 times 40, you earn $320. That's your gross check, but that's not how much you get to bring home. You have all of these things deducted from your check before you bring home your net check, your amount direct deposited, or the amount in your paycheck that you go to the bank in cash. So you have these things withheld. You have federal and state income taxes. You have, these are the amounts that are withheld that help you determine later on whether you owe taxes or you get a refund when you file your income tax return the next year. And in this course, we don't go into how to calculate federal and state income taxes, but if you take business math, the US 121 that I teach, we talk about how to calculate federal income tax withheld. And also, if you take ACC 140 payroll taxes, I teach that course as well. So both of those are really great classes and teach a lot of great information, and I highly recommend that you take those. But federal and state income taxes are withheld. Employee portion of Social Security and Medicare, FICA taxes. These are the amounts of taxes that are withheld from your paycheck that help to go towards paying for Social Security and Medicare. You do not get these back as part of the amount to calculate for any refund or amount you owe for your income taxes. These are a separate category of taxes. Employee contributions for health, dental, disability, and life insurance. If you have to pay for your health insurance, or if you pay for any disability or any life insurance out of your paycheck, those are withheld. And then employee investments in retirement or savings plans. If your job offers a 401k and you withhold for that, then that is also withheld from your check before you receive your net check at the end of the pay period. So those are all the costs that are withheld from your paycheck. But the employer also has costs that they have to pay. The employer has to pay federal and state unemployment taxes. They also have to pay a matching portion of Social Security and Medicare. So whatever is withheld from your check for Social Security and Medicare, they have to match the same amount. Sometimes employers pay contributions for health, dental, disability, and life insurance. And sometimes they contribute to retirement or savings plans. So, for example, with the 401k, if you're contributing, sometimes employers match that contribution. So that would be an expense to the employer. Sometimes an employer pays for all or a part of your health insurance. That would be a cost to them. So these are the employee and the employer costs. And we'll look at these in depth and how to record your journal entries. So, employee costs, federal and state income taxes. In the examples in the book, these will be given numbers to you. Companies are required by law to withhold federal and state income taxes from employees' paychecks. And then they're also required by law to remit these taxes to the government. So just because the employer is withholding this money, they're not getting to keep it. They then have to send it in to the government on your behalf. FICA taxes. FICA taxes are a total of 7.65%, and it's broken down into two different amounts. It's 6.2% is Social Security, and 1.45% is Medicare. And the reason I break those out is it's important to see that Social Security has what's called a wage base. In 2018, the wage base was $128,400. What that means is that you pay 6.2% Social Security tax up to $128,400 worth of earnings. Once you earn $128,400, you do not pay any more Social Security tax. If you earn $1 million, then you stopped paying Social Security at $128,400. And the book references the 2018 number. I put the 2020 number in there just so you can see that it does go up every year, that it is indexed for inflation each year. But the book will tell you what the wage base is it wants you to use. Medicare, on the other hand, has no wage base. You earn $1 million, you earn $10 million, you are paying 1.545% on all wages that you earn. So it's important that you see the difference. You have these taxes. One has a wage base, one does not have a wage base. And this is your cost. You may also have additional amounts withheld from your paychecks for health, dental, disability, and life insurance. You may also have additional amounts withheld for retirement or employee savings plans. So, for example, with my paycheck at Wake Tech, I have federal and I have state income taxes withheld. I have FICA taxes withheld. I have amounts withheld for health and dental and disability for myself and my daughter. I also have state pension withheld from my paycheck. I also have amounts held for child care for my paycheck. And I also donate each month some of my paycheck to the Wake Tech fund to go back into Wake Tech for good causes. So all those things are withheld from my monthly paycheck before I get an amount direct deposited into my account. Now, employer costs. Wake Tech has to match the FICA that I paid. So once you've calculated your FICA taxes here, your employer has the exact same amount to pay. You've already calculated it once, you don't have to do it again. They have a matching amount, the same amount. Employers also have to pay unemployment taxes on behalf of employees. They are responsible for unemployment taxes, not the employee, the employer. They are responsible for FUTA and SUTA. FUTA is the Federal Unemployment Tax Act, and SUTA is the State Unemployment Tax Act. FUTA requires a tax of 6.2% on the first $7,000 earned by each employee. This amount is reduced by a 5.4 maximum credit for any amount paid to state unemployment programs. So most of the time, the net federal rate is 0.8%. Under SUTA, many states have a maximum unemployment tax rate of 5.4, but they could pay more or less. So in the book examples, they oftentimes tell you a combined rate, a combined unemployment tax rate, and we'll see that in a minute with an example. Fringe benefits. Fringe benefits are additional amounts that employers pay on employees' behalf. Health, dental, disability, life insurance, contributions to retirements or savings plans. So, for example, my husband's job, he has fringe benefits. They pay for part of his health and dental. They match his 401k contribution, things like that. Those are fringe benefits. They're additional employee benefits that are paid for by the employer. So this is the example we're going to work through to look at these transactions. Hawaiian Travel Agency has total payroll for the month of January of $100,000 for its total employees. Details are provided below. Federal and state income tax withheld equals a total of $24,000. Health insurance premiums for Blue Cross Blue Shield paid by the employer, $5,000. Contributions to retirement plan of Fidelity paid by the employer equals $10,000. The FICA tax rate is 7.65%, and the federal and state unemployment tax rate is 6.2%. First journal entry is to record the employee salary expense and withholdings. So when recording the employee salary expense and withholdings, we want to record the gross salary for the month, the total amount that the employees were paid, any withholdings from the employees' paychecks, and then the amount the employees are going to be paid. So gross pay is salaries expense. They had total payroll of $100,000. So gross pay is our salaries expense of $100,000. Next, we need to discuss any withholdings. Well, the employees had federal and state income tax withheld of $24,000. Income tax payable, $24,000. It's a liability. We're withholding the money on behalf of the employees to pay to the federal government later. We are going to owe the federal government that money. So we need to hold that $24,000 in a liability account until which time we pay it. So the income tax goes into an income tax payable account. The FICA tax is a FICA tax payable. We need to hold that in a separate account. And it is 7.65% of the total 100,000. So $76.50. Those are the only two items that are paid by the employee, because health insurance and retirement is paid by the employer. So the difference between the gross and the withholdings goes to salaries payable. We're not paying the employees yet. We're just recording it to payables right now. So gross wages of $100,000, income tax payable as stated at 24, FICA tax payable, the gross of $100,000 times 7.65% for $76.50, and the difference is salaries payable. Next, we're told to record employer paid fringe benefits. Remember, employer paid fringe benefits are expenses paid by the employer on behalf of the employee. So do we see any fringe benefits? Yes, we see two. The health insurance premiums paid by the employer and the contribution to the retirement plan paid by the employer are both fringe benefits. So we add them together, and that's an additional salaries expense. Record your fringe benefits to salaries expense for $15,000. Now, we need to credit these accounts separately to accounts payable. We need to record them separately because we're going to pay them to two separate people. We're paying one to Blue Cross and one to Fidelity. So $5,000 credit and $10,000 credit. Employer provided fringe benefits. Lastly, we need to record the employer payroll taxes. So what taxes are the employer responsible for paying? The employer is responsible for paying a matching FICA tax and the federal and state unemployment tax. So we're going to record a credit, an additional credit to FICA tax payable for the same amount, $76.50, and a credit to unemployment tax payable for $6,200, $100,000 times 6.2%. The total of these two, $13,850, is a debit to payroll tax expense, not salaries expense, because this is not salaries. This is the payroll taxes on the salaries. So record your matching FICA and your unemployment to get your total payroll tax expense. When you're recording these, you're going to record them in these three journal entries. You're going to record the employee salary expense, any fringe benefits, and then the employer payroll taxes.